JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 20th of December 2022. So welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation. Should not be considered as such. And isn't so yeah. And of course, it does not in any way constitute an invitation to acquire any financial instrument or product. There we go. Managed to squeeze this one out. I mean, stalled a little bit. So, look, I'll give you a few seconds to read the rest, and then yeah, we can continue. Thank you. Okay, so also just before we jump into the charts, as always, just a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can always check out for more information about us. And yeah, let's jump into the charts, guys. Just of course, before I continue, just a quick update again, as what I said yesterday, that this is going to be the last Traders Espresso until the 29th. So basically, yeah, I'll be off a little bit for a little bit, but yeah, coming back on the 29th. So tune in on the 29th of December. Yep, for another Traders Espresso. But yeah, this one's gonna be the last one until then. So let's jump into the charts, guys. The oh, disclaimer popped up. Okay, bear with me. Up there we go. So look, Nikkei 225, beautiful decline. I mean, okay, so of course the whole kind of news is about Japan holding rates again. I think they stuck with minus 0.1, if I'm not mistaken. Let me just quickly double check that. Yep, that's correct. So minus 0.10%. So kind of they were gonna hope, the market was hoping actually to see a bit of an increase. However, yeah, they kept it there, and of course that kept the Japanese yen on the stronger side, and well, the news kind of hit the market, so it kind of works a little bit, I think, the opposite way with Japan here. So yeah, normally the increase in interest rate would mean that you make your currency stronger. However, here it's still that the rate is in negative territory. So yeah, the Japanese yen kind of acted as a safe haven more, and it took the stock market took a beating, but the Japanese yen did rally, and I'll get to that point in a little bit. Because I think you'll see the fantastic moves there. Now, Nikkei 225, look, I mean, I talked about this. If we just ignore the whole BOJ moment, just from the technical perspective, look, I said that if we do stay below the 27,415 territory, then yes, we could go further south. And well, look at this, going further south. We not only went further south, I mean, we've on the way there, we've tested my target here, the 26,872. This was my initial target. We managed to clear that, and yep, we went further south. So look, I mean, I'm targeting this this upside support line taken from the low the 9th of March, as I said to you previously. Overall, I'm looking at this as a possible kind of triangle pattern here, so kind of triangle wedge, kind of something like that, but neither neither a rising or falling wedge. So yeah, let's stick to the triangle pattern instead. So basically, overall, you might see the index kind of trading around here inside this pattern, unless we start breaking one of the sides. Of course, we're now getting closer to the lower side of this triangle, but don't be kind of, don't rush into anything, because again, we might see a rebound, and we could see this one pushing back to the upside, so just be careful on that. Now, Shanghai Composite, guys, Shanghai Composite, beautiful decline as well. Look at this. So, okay, the breakout happened not today, sorry, but it was yesterday already. So this is what I talked about, and I said that if we fall below this area, I'm gonna go lower, and my next target will be somewhere around here in near these levels, near the 3027, 3035 levels, approximately around here. And then we will take it from there. So at the moment, I am kind of looking at these two areas, sorry, not areas, but these two levels around this area, and then we'll just take it from there, guys. For the upside, well, ideally, let me just get rid of this. Oh, actually, let me redraw this. There we go. I think I'm going to reuse it. I'm going to recycle it. Always recycle, guys. Yep. This is what I'm going to stick to. This is what I'm going to stick to. I'm going to stick to this. As long as we stay below this downside line, I will continue aiming lower. Now, if we start breaking the downside line, this is where we could, consider maybe a move a little bit higher. Now, as you can see, I'm taking away my arrow from here. Look, I'm not saying that this is not my convenient level to watch. No, but it still is. But I think that we might enjoy a moment to the upside if we do break this downside line, because maybe at the same time we could also break the 100 and the 21-day EMAs right here, shown as the green and yellow line respectively. Now, ASX 200, boom, there we go. Look at this beauty. I mean, 7,000, the psychological 7,000 territory got tested, and yep, we rebounded from it. So look, I mean, I talked about this, and I said that if we fall below this 7,150 territory, somewhere below here, then yes, I'll go lower, and yeah, mission accomplished. Because look, my other mission right now is from around here, from this breakout from the psychological 7,000 mark. If we clear it, then yes, I will go lower, because at the same time we would drop below the remaining EMAs here, the 100 and the 200-day EMAs. So if we do clear this level, yes, I'll go further south, guys. If we rebound, now that could be quite interesting for the bulls again, and maybe we could see, something like this going back to the downside line, and then yeah, we will just kind of take it from there. Now, look, this is the thing that I'm watching here. So basically, if you want to be a little bit more, let's say, cautious, and more pragmatic, maybe you could just wait for a break of this downside line. And to be honest, I would be probably with you in this one, because in terms of the upside, I would rather wait for a break of this downside line and don't go higher, because at the same time we would break the 21-day EMA. But at the moment, I am kind of leaning a little bit more towards the downside, but I need that confirmation break. Nasdaq 100, guys. Look at this, further declines. I mean, this is just drifting lower, and yeah, unstoppable. It seems so. However, okay, we broke the everything here. I think the best thing here is to actually remove everything and have a fresh look, because look, we broken all the lines here. I think that'll just bring the this upside line back to the table. And again, this is a question actually, because it might not be that we have broken the upside line, because depending on how you're going to draw this, because maybe it's going to be something like this, guys. So if that's the case, well, guys, I mean, maybe we could see a rebound. So I'm leaving both of these upside lines for now, because both of them are tentative. Neither of them are really, let's say, confirming something here. I mean, of course, you could start, trying to see something here somewhere, and yeah, if we, let's say, hold here above this upside line, great, we could see a nice rebound and a push back up. Now, in terms of the upside, actually, I would prefer to see a move somewhere back above this 11,450. I had the 500 500 level previously, but I think that I'm going to lower it a little bit because look, this has been a very nice area of support which we got broken. Previously the 500 level, the 11,500 did work out nicely for the downside, but now for the upside I will mark this one, this 11,450, and then I'll take it from there. So if we climb back and push back above this area, maybe at the same time we could actually push above the 21-day EMA, which by the time kind of this could reverse, potentially could reverse to the upside. This might drift here towards this level, and maybe a nice breakout here could be possible. Either way, like I said, maybe I'm getting way ahead of myself here. Look, if you want to go higher, I would say that yes, this could be the better option to wait for a pop here, and then we could start targeting the current highest point of December near the 12,166 territory. In terms of the downside, okay, look, I think that of course some of you will say, hey, maybe we already had quite a decent decline, maybe a day or something like that, maybe a day or two we could see maybe a bit of a retracement. Look, that could be the case, of course, but I think that this could be an interesting one here, because look, at the moment, of course, logically speaking, until we see a reversal signal, we cannot really, let's say, start getting excited, let's say, with the upside or something like that. So we need to kind of assume that further declines are still possible. We could still go further, further south here, and and we should be aiming for lower levels. Anyway, look, I think I'm repeating myself already, so long story short, at the moment, if you're looking for some lower levels, then probably wait for this one to see what it's going to do here near this upside line, the last one here, the flattest of these two. If it breaks straight away, yes, we could go lower, but then in that case, I would say, at that point we have to consider the fact that we had already quite a decent move lower. So let's say we go lower here, we break this upside line, we go lower, we test this area around the 10,790, somewhere around here, and then we rebound and push back up to retest this upside line from underneath, and then the action would start, because maybe it could hold. If we would see that it's holding, then we could see a curved move back to the downside and stuff like that. Now, but that's me already getting ahead of myself a little bit. So I would say at this point the most important thing is to see what's going to happen here in this little area. Will we get a rebound or not? If we do get a rebound, okay, great, but still I will consider the upside from around here somewhere, because this could rebound, push higher, maybe test here, and then go back down again. So I'm very careful at this point, because look, I mean, of course, everybody's really hoping to see that Santa Claus rally. It might happen, it might not happen. Maybe this is going to be the year without it. So don't really rely on it too much. However, if we do rebound from the from this upside line here, and we push above this 11,450, then this is where maybe it could give us a little bit of hope that we could see a Santa Claus rally, maybe going into before Christmas, and maybe after Christmas as well, going into New Year. So be careful with that. The German index DAX. Look at this beauty. We broke the hurdle here, the 13,950, and yesterday we kind of ended up oscillating around this area. I mean, this is just annoying, I would say, a little bit, because look, I mean, I'm hoping to see this one drifting further south, but I need to see a good move below this 13,950. Currently, the index on the cash index is sitting below that area, so this gives me a bit of hope that further declines here could be possible, because what I'm aiming here for is this 200 and the 100-day EMAs, and I've mentioned this yesterday as well, which I don't know why it didn't save, but this is what I'm targeting here, the 13,565 area, approximately around here. This is going to be my next target, as long as we stay below below this 13,950 mark. If we stay below it, yeah, I'll go towards the 200-day EMA initially, then 100-day EMA, and then this 13,565 territory, and then we'll take it from there. If we push back above this hurdle, this highlighted zone, then I will consider maybe a move higher, although my ideal scenario to the upside would be somewhere from around here, from around this 14,200 level. But I do understand that, we could be missing out on a bit of territory, so I would take it with a pinch of salt. The reason why I don't like it, let's say, not that I really don't like it, but just my least preferred scenario from here to the upside, for example, is that we could go higher, yes, but the 21-day EMA might provide resistance, and then we could, if it continues to hold, then we might sell off again. So just kind of keep that in mind. That's why my preferred scenario for the upsides from here, but hey, I do understand that we might be maybe missing out on a bit of territory. So you might say that, hey, I'll take my chances. I'll just put a nice stop loss here, a comfortable stop loss for myself. I'll aim higher if it goes higher. Okay, great. If it hits the 21-day EMA, then and reverses back down, then I'll have my stop loss somewhere on the break even here or something like that. But if it breaks this 21-day EMA, I'm going to be in much more profit. So again, could be a nice idea. However, I think that really depends on your risk tolerance and how much you are willing to lose. Why I'm saying that? Because if, let's say, it does bounce here and does move back up, but fails to go all the way towards that 21-day EMA, let's say, gives you like something like yesterday's pop, and then reverses to the downside. So this is where this is how yesterday it got confused here, because it did move higher a little bit, and you can see what happened. It drifted back down, and the cash index is now sitting below this area. So this is one of those scenarios where you have to be very, very careful with. S&P 500. Okay, so this one drifted lower. Look, I mean, I talked about this, and if you remember a while ago, I talked about this as being something of maybe a complex head and shoulders pattern or something like that. But look, it didn't really work out, and instead it kind of worked out more as a range. And yeah, we broke the lower side of the range, and we drifted lower. So okay, I mean, further declines are possible. My next target here, if we do stay somewhere below this 3,859 zone, I will aim for the 3,748 level first, and then so on and so on. At the moment, we're currently sitting at around 3,795, so further still declines are possible. But yeah, guys, only up. This is me, like I said, initially aiming for this one, 3,748. If we clear that, 3,698, then could be the next target. DXY, the dollar index. So, looking at this picture here, I would say interesting, very interesting, still within the falling channel. So in a way, overall, the short-term trend is still to the downside. But if you remember, I've talked about these scenarios already before, and yeah, look. Look, I mean, I talked about this scenarios previously before, because look, I said that whenever we have, let's say, a downwards moving channel here, the prevailing trend was to the downside. So in a way, some of you might say, hey, maybe a further decline here could be possible, but I started noticing that it actually pops to the upside here at some point, so it breaks this it breaks the upper side of the falling channel instead. So it's kind of, after a strong decline, you have this kind of gradual decline, and then there is a reversal to the upside. So just out of my own personal kind of observation, although some textbooks actually do see this as more of a continuation pattern. So if that's the case, okay, I mean, it could happen. However, this, I think, just kind of puts me back to the point which I always make: wait for a breakout. Because in that case, this is where, if it, let's say, if it breaks the upper side here, like straight away, and goes higher, and this is where I'll say, oh, this is what I said so, and this is this is what I thought, and yeah, blah blah blah, and like you know, overconfident and stuff. But then if, let's say, if it breaks the lower side here, and then all the people who are, you know, follow that textbook say, oh yeah, exactly, like according to the textbook, so you know, and they get overconfident. So in order to kind of avoid this this kind of battle of who's right, who's wrong, but just kind of wait for that confirmation break. If we break this upper side, great, we'll go higher, you know, because at the same time we could break above the 200 and the 21-day EMAs. If we break this 103.45 level, great, I'll go lower towards the lower side of the falling channel here, and if we clear that one, yep, my next target will be this one, the 101.30. This is going to be the lowest. This is the lowest, near the lowest point of May. Good potential target. Hey, why not to reach that one? I mean, we're already below all of the EMAs. If you just ignore the whole falling channel thing, we're below all of the EMAs. So further declines are also possible. But that's why I'm saying you just kind of, you know, watch that breakout. Gold, very quickly on this one. Rising channel. Look, I've drawn this one before recently, and I said that, hey, maybe we could see, you know, if this 1797 territory holds, continues to provide resistance, then yep, another decline here could be possible. So far, to be honest, I'm going to stick to that idea. However, if we start popping above this area, I will consider maybe a move higher, but probably from this 1808 zone, somewhere around here. If we clear that one, then yes, I will go a little bit more to the upside. This level, I will redraw this. This is the highest point of December, the current highest point of December, 1824. And in terms of yeah, I think I'm going to mark this one. This is a good level, 1774. Coincides with the 21-day EMA, good potential target, but if we fall below it, it opens the door towards the lower side of this rising channel. So long story short, guys, at the moment, I would say I am kind of still cautiously bearish as long as it stays below this 1797, 98 territory, somewhere around here. If it holds, yep, then I'll consider a move lower. But if it fails, hey, I will consider a move to the upside, but probably only from around this 1808. WTI oil, look at this. This is quite interesting. So we got a hold up near this downside line initially. It's held. Okay, great. It started moving lower, but then it found support, good support near this, around this 73 territory, somewhere around here, guys. It found good support here, and we rebounded. Now, the question here is, can we see a move higher? But for that, we need to see a breakout through this downside line, and maybe also just for that extra confirmation, a push above the 21-day EMA. So if we get that, great, I will go to the upside. So let me just lift this arrow a little bit. Yeah, pretty straightforward. And the fact that considering this move to the upside is the fact that we are, it seems like we could be forming a higher low. We don't have a higher high yet, but again, maybe I'm getting ahead of myself here a little bit. So if we do break this downside line, yes, I'll go to the upside. For the downside, I need to see another drop here below that 73 territory in order to go lower. But as I said before, ideal scenario is from the psychological 70 zone. ETC USD. I talked about this one before, and look at this. We broke the triangle here, and we broke this upside line, and this is what I said to you previously. Look, my kind of more comfortable scenario for the upside is from around this 21 zone, which didn't really, let's say, work out very well. My downside scenario was in a break of this upside line and a drop below the 18 zone. Well, we got that. We got that, and my next target now is this area around the 13 mark. So the lucky 13 could be the next target. That's near the lowest point of June, near the lowest point of July, somewhere in between there, kind of. So yeah, good potential target as long as we stay below the 18 mark. If we push back above the 18 mark, this is, I think, where I'm gonna lower my arrow here a little bit, and this is how I'm gonna treat it. If we do climb back above the 18 mark and above this upside line, I will consider a move higher. Now let's jump into a few pairs very quickly. AUD USD. So there we go. Look, I talked about this one after. If you remember, I've drawn a rising wedge, which worked out. I was quite happy about it. Yeah, very smug about myself, I think. So in terms of the upside, what I said after that, I removed the lower side of this rising wedge because it worked out. Now the question here is, can we see a further move lower? Well, what I said to you before, that if we do drop below this 0.6681, I will go to the downside because, well, we would fall below all of the EMAs as well, and potentially could lead to a move towards this upside support line taken from the low of the 13th of October. Now, I'm not saying that this is another rising wedge. It could be, but hey, I think that we do have a way too much freedom here, free area, so might not even be maybe a rising wedge. So that's why I'm just sticking to the idea of an upside support line for now. But that's going to be my target as long as we stay below the 0.6681 level. If we push back up here, I would prefer to maybe wait for a push above the 0.6814, 15, something like that, maybe even 20. So just basically I would like to see a move above the 200-day EMA in order to go a little bit more to the upside. Now, ladies and gentlemen, AUD JPY, of course, the yen took, I mean, it is strong today. I mean, let me just quickly double check the strength indicator. There we go. Yeah, look, I mean, the yen is gaining the most. AUD is the biggest loser at the moment. So AUD is the biggest loser. Yen is the biggest gainer. AUD JPY beautifully to the downside. I mean, look at this move, guys. Just yesterday I was talking about this and I said that, hey, wait for that confirmation break, and what I need to see here in order to go lower, I need to see a break below the 91 level. Did I get that? I got that. Wonderful. And look at the just picture perfect textbook descending triangle pattern. We broke the 91 zone, and now we are aiming for this hurdle right here. Let me just put this one on the chart. The lowest point of May near the 87.30. That's going to be my next target. I'm going to be aiming for that one, and as long as we stay below the 91 territory, I think that it might, well, actually, I shouldn't be laughing here, because if I'll jump into EURUSD. That one is, yeah, shouldn't be laughing at this. It might go back up. Look, even if it does retrace back up here, as long as this stays below the lower side of this triangle, I'm going to continue aiming to the downside, towards my 87.30 level, and then I'm going to take it from there. AUDCHF, look at this beauty. Also followed suit, and it fell below this. Look, I mean, my charts did not save yesterday. I mean, I've drawn this here, this idea of another range here. So we had a range within the range. This is what I was talking about yesterday. So yeah, this is the lowest point here. I was talking about this idea, and yeah, look, I said that we might see a rebound or something like that, but if we do start falling below this 0.6212 zone, then yeah, I'll go further south. My next target is the 0.6135 right here. This is what I am aiming for now. This is the low of the lowest point of May, actually, the lowest point of May of 2020, not this year, 2020. This is what I'm aiming for, and yeah, pretty straightforward. As long as we stay below this hurdle, I'm gonna go lower. If we do somehow climb back above this lower side of the this range, well, in that case, we'll have ourselves a beautiful false breakout, and that means that maybe the bears are not really ready to take control, and we could see the bulls kind of driving this one back to the upside. So keep that in mind. USD CAD, very quickly on this one. Look, this is still beautiful. I mean, I'm watching this one and I'm waiting, and I think that this week might happen, something might happen, or I think should happen. We do have some Canadian numbers coming out today, so the retail sales figures, those might drive the market a little bit. We have the housing starts in the US, so also, and together with the preliminary building permit numbers. So look, this maybe today we could see this one doing something here. Ideally, I would like to see a pop higher, pop above the 1.37 territory. If we can clear that, my next target is the 1.38. If you remember, a while ago I talked about this pair and how well it likes those beautiful round numbers. That's like 1.37, 38, 36, 35, 34 even, and let's not forget the 33 as well. So yeah, it does like those numbers so far. But again, a confirmation pop is needed here in order to go higher. For the downside, a break of this upside line is required for me. That's my target. That's my kind of approach in this one. All this area here, I don't like it. I'll just continue observing. USD JPY, of course. JPY strength. There we go. Drop below the 200 EMA. Drop below the 133.63. Everything looks fantastic. The only issue I have is that the drop here is not that significant, for example, as in the AUD JPY, and that's why further declines here could be possible. I think. Look, I mean, there could be possible. I think let me rephrase that a little bit. They could be possible, but as long as it stays below the 133.63. Here, my problem is that the break was not that strong. Maybe it could reverse back up here and end up being within this kind of squeeze, continuing to oscillate around that 208 EMA. So in other words, kind of doing nothing here, and that's what I don't like to see. But however, hey, it's the game. That's the market. Sometimes it happens. So I don't think that. Unless DXY here, for example, continues to slide, then yeah, we could see, on this whole kind of thing that with the weaker USD and stronger JPY, yes, we could see a scenario where we could see further declines. Look, I think that to simplify life here, simple approach here would be, for me specifically, I would say if the pair continues to trade below the 133.63, I will go lower. If it moves back inside here, of course, I'll keep on watching till the end of the day what's going to happen here, because maybe it's going to, travel back up, test the 208 EMA. We'll see that there's no buyers here again, and could fall off the cliff again, and by kind of moving back below the 133.63 by the end of the day. So just kind of keep that scenario in mind. GBP USD, guys, yeah, there we go. Look at this. The 21-day and the 208 EMAs are continuing to provide that plateau for some playing around here. Yeah, at the moment, I think that this target of mine, the upside support line or the lower side of the bigger rising wedge here, could be reached, but not by a move, but just by kind of time being flat here somewhere above these two EMAs, and just kind of moving to the right here and kind of getting a touch. However, we could see still a positive in that, because look, if that's the case, then we would see this one flat, maybe. So on the shorter time frame, you would see a nice range here, all the way towards this upside line, the lower side of the rising wedge. And then if this decides to have or should say, consider not only the rising wedge idea, which could lead to a move lower. And maybe it could also, let's say, if it does range here on the shorter time frame, the prevailing trend before entering this range was a strong move to the downside. So it could be a continuation pattern as well. So two for two kind of not 2 for 2, not for 2 for 2, but two in favor of the downside. And in terms of the upside, the only thing is what's in favor of the upside is the fact that, well, until we get a breakout, we cannot really go lower. So it might continue to hold here, and if it rebounds from here, well, ignore the downside scenario for now, of course. GBP JPY, very quickly on this one. Look at this. I mean, I'm talking about a lot of these JPY pairs. I'm not just touching the Euro JPY. I think I think the 3 will be enough here. I mean, similar story on Euro JPY. But GBP JPY, first of all, I haven't looked at this one for quite a while. You can see that there are no levels for now because I'm just kind of purely watching the EMAs here. Because look, we have been oscillating around them, and now we have moved away from this 21-day EMA after today finding very strong resistance here. Yesterday we found resistance. Today we found resistance, and if that wasn't a signal for you guys, of course, don't get me wrong, it would be difficult to, if you're trading European or US sessions, I mean, it would be difficult for you to kind of, jump in there. However, if you're trading this during the Asian session, well, this was a very good indication that, to step in here. And we fell below the 100-day EMA, and we fell below the 200-day EMA. So, look, long story short, as long as we stay below all of the EMAs here, I'm going to continue to the downside. I'm going to continue aiming for this little hurdle right here, near the 159.75, and that's near the lowest point of October. Yep, that's correct. So the lowest point of October could be a nice target if we continue to trade below the 200-day EMA right here. So don't be surprised if something like this could be possible. Now, if you're looking for some higher levels, well, this is what I want to do here very quickly. So I think that the safer option probably would be to wait for a pushback above this upside line, because at the same time you would actually clear this little hurdle, this little obstacle which we broke, the 165.08, because at the same time, if you clear this upside line, we come back above it, we also come back above this 165.08, and then potentially this could attract a few more buyers into the game. Then we would aim for this 21-day EMA if we clear that one, because again, we should not ignore it because it was a good area of resistance, 167 territory here. If we clear that one, we could slowly, grind higher. But again, for that moment to happen, you would need to see at least a push, back above this upside support line, which we broke. I'm not saying that we cannot revisit it from underneath. We have had that, and we have talked about this a few times already, so we could see that happening. However, at this point, I think the breakout was very strong, so I'm considering, like, say, if there is a retracement, I'm going to maybe up until 200-day EMA. I might be wrong, don't get me wrong, but at the moment I'm seeing it this way. However, I might be wrong. It might reverse totally back up here, but in that case, if it does do that strong reversal back to the upside, well, might as well do the whole move back above this upside line, and then I'll be a little bit more happy with the upside. EuroCAD, very quickly on this one. This one is interesting, getting interesting, I would say, because look, if you remember, I talked about the fact that we're not seeing the reversal signal or something like that, and I think that, well, at the moment I am keeping an eye on this 1.4462, where we're currently getting a nice hold up. It's acting as a good area of support, previously acted as a good resistance, now it's support. Yesterday we saw a push higher initially and then drift lower. But still rebounded from this support, the 1.4462. Today we're seeing a push higher, rebounding from this support level. Look, I said before that I'm not excluding the possibility of seeing this one to moving towards the 1.4629 or 46 level here. But at this point, given that it's showing some signs of weakness, I'm going to take it very carefully. Look, if we do start falling below this 1.4462, I will aim for this upside support line taken from the low of the 4th of November. But this upside support line is very tentative because I think we need to draw it somewhere a little bit this way. Let me just drop the line here a little bit, zoom in. So something like here, it does kind of give us very, very small room for activity, for maneuverability, but it actually could be quite interesting because then we could break this upside line. We could break this upside line and we could go lower. And that's the case. Well, guys, welcome to the move towards the 21-day EMA, potentially. It's not guaranteed. Potentially, and to be honest, nothing is guaranteed in this market. So, hey, we're just trying to kind of here improvised a little, tried to have some sort of an analytical approach, and so far it's working. But hey, we're always leaving an element of the doubt. Now, in terms of the rebound, for example, or let's say if it continues to trade above the 1.4462, I will go higher, guys. Honestly, I will stick to the upside here as long as we stay above the 1.4462 territory. So far, we're above it. That's why I'm leaning a little bit more towards the upside. We drop lower, I will start slowly considering the downside. EURUSD, and this is what I mentioned about the the testing kind of the strong reversals back up. Look, I mean, we had a pop here on last week on Thursday. We moved nicely through this upper side of the falling channel. Great, we went higher. Then the next day on Friday we retraced, and this is where a lot of people got scared a little bit. Started hey, maybe it's not it's the wrong one to be here, but I think there was just an opportunity for those who missed this rally just to step in, and you can see what's happening here from Monday. We saw a reversal back up. It went to this 208 EMA, found kind of resistance around here, and today we're seeing a further move higher. Weaker NZD is, of course, to blame here. Not the super strength of the euro or something like that. No, it's the whole yen thing, and and NZD is on the weaker side together with the Australian dollar. So it's like kind of second in line. So it's first it's AUD, then it's NZD. So the question for me here is now what's going to happen here further. Now look, I think this arrow has to be redrawn this way, and I think, in my opinion, this barrier has to be considered. So the high of last week, because as you can see, today we found some resistance here near the 1.6794. If we clear that one, I'll go higher. Simple as that. We do have another target, the 1.6846. Yes, we could aim for that one. Very good potential target. But if we clear that one, guys, I mean, yeah, my next target is the 1.7112. And finally, EURUSD. So EURUSD here. I think I need to wrap up my video, guys. I think I need to jump off. I think I already overdid it by a lot. So look, I talked about this one and said that, hey, if we, I think I've redrawn this yesterday. So 1.0575 area. This is what I'm 76, something like that. I'm keeping an eye on this one. If we fall below it, I'll go for the lower side of the rising channel. Simple as that. For the upside, I think I will keep an eye on this little hurdle, this 1.0695. If we clear that, I will go slowly to the upside. Pretty straightforward on this one. So guys, I'll have to wrap it up here. I think I really overdid my time, but thank you very much for watching and listening. I really appreciate your views, your likes, your comments, guys, everything. I really do. So thank you for that. If you want to catch me, well, as I said before, there won't be any Traders Espresso in the near time until the 29th of December. So thank you very much, guys, for watching and listening. Please join me on the 29th for the kind of last sessions of this year, and yeah, we'll take it from there. Have a wonderful Christmas, everyone. I will see you on the 29th of December. Thank you very much, and bye-bye.